Thanks, Tim. Good to be here. Good morning, everyone. As my name suggests, I'm Adrian Floate. I'm the Managing Director of Cirralto, and we are the owners and developers of the Spender platform. And Spender is really a platform that connects buyers and sellers, enables them to manage flows from sale through to invoice, through to payment and lending. And I suppose what that really means for us is that we're a software company and we're a payments company and we're a lending company and or a fintech, which is difficult at times for people to get their heads around. So if you wouldn't mind transitioning the slide, Tim, that'd be great. Thank you. I guess for me personally, this has been a very long journey where we've taken the collective learnings of a really strong team, and we're bringing to market, I suppose, solutions to the common problems that exist within a business, from how they sell to how they collect money, their cash cycles, etc. But probably the thing that sets us apart is our ability to connect value chains together. So we've got a really strong offering for a retailer to connect to a consumer. And then we get really interesting when we allow that same retailer to turn around and trade with a wholesaler or a distributor. And then again, with a distributor back on into a manufacturer. And then for primary production, looking at farm inputs like fertilizer and chem and other sort of different kinds of structures. And I suppose for us, collaboration is really at the heart of what we do. And it's probably the thing that gets us up in the morning and excites us, is our ability to create new ways to share data and transactions. And those transactions often result in, amazingly enough, a payment event. So for us, digitization and the digitization of business has had a real kick along through COVID. And we can probably almost stop talking about that now, because now the world's starting to open up. It's pretty exciting to be looking forwards to normal again. But what has happened is the world's looked at how it will operate, how it wants to collect funds, how it wants to make sales, raise invoices, and share that data through, if you like, the business framework. And that's what we're really good at. So we're to business like what WhatsApp is to communications, where we allow those standard transaction types to be shared end to end. And that gives us incredible insight when it comes to lending. And obviously we've been announcing recently new innovations around buy now, pay later. We've got a really exciting development we've been working on with cross-border buy now, pay later, which we think is enormous. And so look, we've come off the back of our best quarter. If you wouldn't mind changing slides for us. Really sort of transformative stuff for us. So if we do nothing more for the rest of this year, we'll have 100% growth plus, which is not bad. And obviously we don't plan to do nothing more for the rest of the year. We had really good revenue growth in this quarter, cash receipts growth. Interesting thing around that is our buy now, pay later revenues and some of our lending and payments revenues really didn't get a big Guernsey, because if you like, when we transact, we don't see the revenue for 30 days from the invoice. So we're really pleased with the outcomes that we got in the most recent quarter. We're obviously well funded. We've made announcements around utilizing more of our balance sheet to expand our lending and payment rail. And I guess as an organization, the really key thing for us to understand is, I guess for the market to understand, is we selling is not really what we're about. We view ourselves very much as a global technology and a global solution. And to that end, we're really focused on how we build structures to, if you like, expand our capability and expand our services outside of Australia. So we recently announced an acquisition with Green Shoots, which, in turn with our debt warehouse works has really established us, with a footprint for where we want to go into Asia and then more broadly overseas. So I suppose the numbers we're throwing off at the moment are very much what we would see as being our walk phase of our commercial development. We've sort of really not pushing the envelope extremely hard on revenue, and we're probably just coming to the end of that cycle now. So it's a really pleasing time as we come into the end of this year and look at some of those sort of big lick numbers we've got, and then keep that momentum going. So if you wouldn't mind changing slides for me. I guess looking at it in a longer term sense, we have managed growth at about 36% quarter on quarter for the past 7 quarters. We've obviously been heavily focused on really solving 3 key problems to be that global business. So one is transaction scaling and really release scaling more than anything else, so we can get more innovation and open up more markets faster. So the whole team's been building around volume benchmarking and looking at transaction per second scaling points, which we think is really exciting in terms of prospects, because when we look at the way we lay our revenue, our ecosystem allows us to take, as an example, I'll use a retailer. Our retail offering, we can make really nice revenues out of bundling together point of sale, e-commerce, and payment service. But when we get really sexy and we can start putting some real sunshine between us and, say, a competitor like Square, is when we say to that business, hey, let's turn around and offer you a buy now, pay later facility. And when we do that, we can lower your payment service, but from an overall perspective, really double down on the relationship with that customer. So we start to build these incremental revenue points where payment might be worth 0.7% of flow. And so $1 million customer might be worth, say, $7,000. But when we add their lending over the top, or their buy now, pay later, or trade finance, we can add another 2% of 500. So as I say, we can double that customer. And it starts to get really easy to understand. The more you disconnect the payment coming from the customer to the wholesaler, and the better you control those flows, the more and more money you need to manage that flow between those 2 businesses. And I suppose to that end, we've done really well in establishing integration with the MasterCard track payment service. And that business payment service is really ideally built for multi-currency, financial services, early settlement discount. It really aligns very well to all the things that we've been developing as a core service, and gives us a great capacity to scale more effectively from, I suppose, very big enterprise customers down to small customers. So, that's been a fantastic outcome of the most recent quarter. As I said before, we've been establishing our debt warehouse facility. That's been really exciting works, and really the key for us is to build a bankable structure that takes us abroad, but allows us to, if you like, expand those domestic capabilities, which is super exciting. We're cornerstoning that with our own money, which has been, I suppose we're doing that for as long as we can. For as long as we can max out our returns using our own balance sheet, we will. But ultimately, what that debt warehouse facilitates is us to lend more, manage more flows, and I suppose we buy money wholesale and sell it retail. And we keep the bit in the middle as our revenue. The quarter's also seen a number of acquisitions that really round out capability and bolster us as a true transaction engine going forward. So as I said before, for us, it's all about shaping the way in which businesses trade. We see marketplaces and digitization of the whole sales lifecycle being at the heart of our opportunity, and we expect to continue to announce transactions in that space. And we're really excited to be completing green shoots, very, very soon, and really establish our Asian presence. We even see India as its own market. It's just a monster opportunity. It's many times bigger than the Australian marketplace. And as one person put it to me the other day, it's the IPL of e-commerce. There really is a massive opportunity to go along that digital wave in such a big economy with a fantastic team sort of at the cornerstone. So it's been an exciting quarter. It's set us up for the quarter we're having now, where we're really happy with how we've come out in October. And then, for us, it's all about putting those little key fundamentals in place to keep us growing through the back end of this year and into Q1 in 2022.
Thanks, Adrian. You ready for me?
Knock yourself out, mate.
Hey, there's a good question here. Can you tell us the clip you take from the payments during each part of the supply chain? How many clips can you take from the business, given you are following the transaction from the kind of manufacturer to the supplier to the retailer to the customer? Can you talk through how you get paid?
Yep, that's a good question. Okay. All right. So if we were to start off at the retail end and we were to do that, say $1 million of sales, we would, at the gross end, clip 1.5, but we'd report about 0.7. 0.7, anything from, so 0.7 is a good number to use. If we then turn around and look at lending, as per the Holler announcement, 2 would be pretty normal. So for us, but where that then gets interesting is if you blend buy now, pay later with card, you'd get 2 plus 0.7. So that single flow would be worth 3.4 on that transaction. And if you come the other way and we talk early settlement discount in the wholesale distributor, that could be another 2. And again, if we card blend, 2 plus the 0.7. So it doesn't probably matter where we play, the more we can effectively card blend. It does 2 things for us. It lowers the cost of funds to the buyer because it lets them use their interest-free days on their card. It also gives us payment certainty. And that's really at the heart of what our business is giving certainty of supply to the buyer and flexibility in payment and certainty of payment to the seller, so they're not sitting there holding the baby, as it were, with their stock gone out the door but no cash in the bank. So look, we can take a clip the whole way along. We'd obviously, from a maximization of capital perspective, we wouldn't be looking to take anything that was sort of less than that 2% position on a single flow. So that probably summarizes it really well, but generally speaking, we're 2 plus.
And so with the buy now, pay later offering, I mean, we know there's a lot of competitors there, but there's a fairly low participation rate. So there's the opportunity. Can you tell us how many retailers have signed up for that?
Oh, mate, it's changing every day. It's very difficult to give you that as a number. We now are reporting sort of on a weekly basis. So we're certainly adding customers 50 to 100 in a week at the moment. But yeah, I have to say, I take a more broad brush approach of it these days. There's too many names for me to retain, but just certainly growing very successfully. And hence, from a technology perspective, everything for us is about boarding. How can we take barriers to entry out? And that ranges from opening a service to also expanding a service. So a customer that's got a $5,000 facility, how do we, if they're giving us good telemetry, how do we automatically offer them 10, for argument's sake?
And with your acquisitions, is that based on, are you making acquisitions based on the technology you need to plug into your platform, or is it based on clients, or what's the premise there?
Well, it's probably a little bit from, there's a few metrics, but the first thing, obviously, the first test is, should we build it or buy it? And if we can get an advantage, because there's always gaps. You never have the perfect system. Everything's always evolving. So if we can get a speed to market advantage by buying something, and we think the teams will align to our culture, and we think we can sweat that capability and make more money, well, that's obviously going to be pretty attractive to us. But there's also ancillary benefits. So, if you look at green shoots, technology, yes, team, yes, but proximity to Asia, big bonus. So there's always ingredients that create drivers for transactions. And they're not the same 100% of the time.
Okay, and just time for one more. There's quite a few coming through. If you wouldn't mind answering some of those live, if you don't mind.
Sure.
Any expectations of when you'll be cash flow positive?
I would say we have enough working capital at bank to achieve that outcome. I mean, at the end of the day, we probably did exactly what we thought we'd do last quarter. We're investing heavily in expansion. When you invest heavily, it obviously costs money. As per like the mine establishment previous presentation. So it's not a million miles away. You can do the maths yourselves from a scaling perspective. The easiest way probably to get a range for it would be to have a look at how many facilities we might issue or payment flows we might issue using say 5 or 10 grand as a number. And that 2% metric, you start to see it's not a lot of customers to kind of get to the end game. And it becomes fairly easy to accelerate if we eliminate some of that friction in terms of boarding, which is 100% about our focus right now.